Hi, everybody. Thanks for following along with our last minute change, but really excited to be here and talk to you a little bit today. So hopefully it won't be too disappointing. I'm Kathryn Heffernan. I'm actually a CMU alum, so graduated from Tepper School of Business in 2018 and Hines. So I did the dual degree. So I got a MBA and a public policy degree from Hines in 2018. Prior to that, and actually before coming to business school, worked in a very different field than I do right now. I worked in education nonprofit management, so doing a lot of kind of small nonprofit building and then some internal consulting with some larger businesses or in education-focused companies really focused on change management. So came to CMU to switch careers, as you know, I'm sure a lot of people do, and really was pursuing a career in healthcare and healthcare innovation following graduation. So it's a little bit of my background. I've been with Enterprises and UPMC for 4 years, and so I work within the Enterprises division of UPMC. So as you mentioned, UPMC, for folks from Pittsburgh, is relatively well-known, 40-plus hospitals system, as well as a connected health plan with like 4.5 million lives under management. But we also have a couple of other divisions that are not as well known, but super interesting. I work in one of them. So one is our international division, which has, runs cancer centers in places like Ireland and transplant centers in places like Italy. So really kind of taking some of the knowledge and innovation that we've built within Pittsburgh and bringing that to other potential patients abroad who might not have those in their home countries. And then Enterprises, which is the innovation and commercialization arm of UPMC. And so we really look at innovation opportunities that have commercial potential, and that can be partnering from internal innovations and looking to sort of get them out into the market and selling to other customers and benefiting from the kinds of things that we've been able to benefit from internally. But it also means taking more of a corporate venture capital mindset and partnering with promising companies, helping them to become vendors to UPMC and to test their new products and help us solve some of the problems that we're seeing within our four walls. Part of that, we also take capital stakes in the business.
So that's, and I want to get into like the Enterprises model, but let's just talk a little bit. What's your role within Enterprises as well, just first context setting here?
Yeah, sure. So my title is Director of Product Management, although that means a wide variety of things. I'm within our digital solutions team, so I focus on a wide variety of digital health opportunities. Currently, I sort of cover the pharmacy-related verticals as well as women's health, and so that means working on some internal innovation projects within those across those verticals, but then also doing market scanning, finding new companies, opportunities that, again, might be not only good investment opportunities, but also good opportunities to bring in within our four walls and help solve some of those problems. So I focus on both of those things, but within a larger team that focuses on digital health opportunities.
Awesome. So, one of the things I think that's important when you think about corporate venture capital, right, is that at least till recently, we'll see what the next 6 months look like, but at least till recently, capital flowed really freely into startups. It was kind of an exception, not the rule, for someone not to have 3 or 4 options for who they were going to raise money for in a given financing situation. And so you had to sort of convince people like why they should raise from you versus raise from somebody else. And it turns out, it's not surprising anybody in this room, that like money is money. So, my dollar and your dollar look a lot the same once the check clears. So the thing to me that's interesting about corporate venture, specifically from the investment perspective, is that you need to be more than just the dollars that you're writing, more than just the check that you're clearing. And so that's why I called this panel originally sort of more than dollars. What does that mean to you? And I guess then related, like, when you think about the Enterprises capital component to what you're doing, what are you guys doing for startups beyond the dollars that you're giving them?
Yeah, sure. It's a great question. Agreed. money coming from UPMC versus any other potential investor, it's all the same at the end of the day. It's all as green as everyone else's money. And so, yes, it is important for us to figure out how we might be able to add value to a company beyond just that capital investment. And as a corporate venture arm, it's also important for us and to make sure that we are thinking about how the companies that we're investing in solve potential problems for us. And so that's really one of the ways that I think we are able to differentiate ourselves. The model that actually we've adopted is sort of capital last when we think about ways to partner with a company. And so I think that that's a way we really help to kind of differentiate. The first thing we look at actually when we're evaluating a customer or a potential company is, can we be a customer of that product? Is it actually solving a real problem for us? Companies can learn a lot by going through kind of a customer sales process within a large company like us, a lot. We can be very difficult sometimes on that, to be totally candid. And so, but if it can't sort of pass that hurdle for us internally, it's probably not a great investment. It actually is not great for the company either, for us to be on their cap table but not using it. And so we try and figure out in a different ways, whether they be pilots or full-blown enterprise agreements or other things that we might be able to do, some way that we can actually work with the companies that way, and that's a way we can get a ton of value add. Secondarily, we do also look for what sort of is called the second C in our model of co-development. So I work in a group that actually has a ton of technology expertise, everything from data engineering to cloud security to more infrastructure type things. And that's huge for young companies, and particularly in the healthcare space where the regulations are so arduous on those types of things for good reasons. And so we look for ways that actually we can sort of work alongside those companies to help build additional value from a co-development perspective. That could be advising them on their cloud services strategy. That could be on figuring out how to, harden their ROI and then put out a white paper. And sometimes it's actually even like leaning in and building product alongside the company. So we actually look for both of those boxes to be checked before we even consider writing a check.
Yeah, so let's double click on that customer thing for a minute. And I know this was not on the script, but I can't help myself. I think that this is something that people don't often appreciate. Like the biggest value creation moment for a startup is the difference between 0 customers and 1 customer, right? And then it's not quite as big, but 1 to 2. And in the B2C space, like add some zeros to these numbers. But like adding chunks of customers is big here. But yes, many companies, not just UPMC, are somewhat difficult to work with, and it's hard for startups to figure out how to get through those processes. Is there anything you guys are doing to try to make it easier for companies to get through this program? And like, how do you guys, if it's the top of the funnel, like how are you trying to, take some friction out of that process?
Yeah, one of the things that we really try and do is get early and quick feedback from stakeholders and decision makers on if something is interesting. So we can be the top of the funnel. We hear a lot of company pitches, and we're pretty able, at a high level to say, this sounds interesting and differentiated to us and sounds like it's solving problems we've heard. Versus something that's maybe not quite there yet. And so if it sort of passes that initial sniff test, we will go to those decision makers before putting the company in front of them and ask them questions. Does this make sense to you? Is this something you'd be interested in learning more about? And so we're really able to get a quick read on that. So if we need to say no, or this is not the right fit at the right time, we can do so quickly and gracefully so the company doesn't, frankly, spend more of their time and more of their limited resources on chasing us down. But then if it is, we're able to put them right in front of those decision makers for the first or second meeting. And we can often sort of guide them on some of the things that we want to make sure that we're optimizing for, and so that we can help sort of make that pitch go as smooth as possible, and then can continue to push for decisions and things like that within the stakeholders. We do a lot of listening for problems and meeting with our internal stakeholders to hear about their strategies and things like that, so we can do that better matchmaking as rapidly as possible. It's a big thing of what we do, and it also helps us when we look at the market and see companies to be better investors.
Awesome. And then I guess just one other, not on the script question that came when you were giving that the answer, which is on the co-development side. So if you get through gates 1 and 2, but not the capital gate, right? So you do the customer, you do the co-development, and then capital doesn't work out. How do you kind of handle the stuff that's been co-developed?
Yeah, usually we try and couple those two things together. Again, so that one of the things that we find capital enables is really making sure that we're all marching in the right direction. And so we try to not enter into like a co-development opportunity if we're not pretty confident that we're going to take capital. There's certainly times it happens, and the value can accrue to the company, and we don't take the capital stake, but we try and couple those things together because it's a really nice strategy for incentive alignment.
Makes sense. Okay, so let's talk about kind of deal sourcing. So most CVCs, I don't know how true this is for enterprises, a lot of their deal sources come from other investors. And so if that's the case for you, like how do you articulate this value back to traditional VCs?
Yeah, I think the traditional VCs understand this pretty clearly, and particularly in the healthcare space where that moving from 0 customers to 1 customer can be a really big deal because there's so much upfront startup integration costs that are required. And so we enjoy a lot of relationships with traditional VCs, sort of across a couple of fronts. One being bidirectional deal flow. So of course, VCs, send deals to us to look at, help them do everything from co-invest opportunities to, hey, does this sound interesting? But we also send deals back to them if we see things that, again, maybe aren't the right fit for us, but we think that they could be a value-add investor. We'll make the introductions to the companies. So that's a way that we're able to sort of demonstrate that bidirectional value. And again, we enjoy those relationships with a lot of traditional VCs, and helping with diligence support is also a way that even if we're not going to move forward, on a customer side is a way that we can be helpful and continue to demonstrate that value, even if it's not from a customer perspective.
Nice. That was a great answer. That's awesome. So another thing that often you hear traditional VCs complain about corporate VCs is that like they make a lot of promises before they invest, and then after they invest, they don't actually follow through on those commitments. I don't hear that as much about enterprises. So like, what do you guys do to like make sure that you fulfill the promises kind of pre-capital, maybe in that collaborative point after the investment?
Yeah, I think part of our model of finding that customer hook is a big piece, because that is us having sort of made a commitment that we are going to figure out how to use this thing and be value-added investors. So it's a way we can knock down some of the over-promising and under-delivering that is, happens. And so I think that's a big way to do it. And then, I would say some of the things change, and I think just figuring out how we can continue to add value to companies once we've invested, and not, again, sort of say, okay, this is great, we're on the cap table, but we're not going to do anything else, is a way that we can sort of hedge against some of those things.
Do you guys typically take a board seat?
We can.
Okay.
Board seat, board observer seat. It's different with every company based on ownership stakes and things like that, and what makes the most sense for them. We don't have hard and fast mandates on that, though.
If you don't, what's your kind of check-in process with them to make sure that you're staying up to date?
Yeah. Usually we, talk to them every quarter or something like that. We do our own, review of our portfolios and things like that. But we try and have regular meetings where if we're not at the board level, that we can talk to them, understand what's happening, and understand what's on their roadmaps. So again, that we can figure out either if there's additional co-development opportunities we can add, or additional customer upselling we might be able to do internally. So that's some of the ways that we continue to check in and maintain those relationships.
So if you were going to try to like generalize this for someone who's thinking, okay, like I want to help my company sort of set one of these up, I guess maybe to step up a level, like anything that you'd say, okay, here's some best practices to consider, or here's some pitfalls to definitely avoid?
In terms of
how value add, so if this concept is being more than money, which the next couple months, who knows what's going to happen, but money will flow freely again into startups at some point. Again, what the next 60 days looks like, anybody's guess. But it will start to happen again, and we will have to be competitive to get into these things. Like, what are the best practices to make sure that you're fulfilling these more than money commitments to your portfolio companies?
Yeah, I think it varies, and it also varies, I would say, based on the company and where they are in terms of their stage. So the younger companies, we make sure that we're, frankly, a little bit more involved with them from a governance perspective. We offer actually from a technology advisory services perspective. And so we are touching base with them more regularly and continuing to make sure that they are executing and delivering on some of their customer things, and so none of that's at risk. And then, in our later stage companies, it's sometimes there can be less regular check-ins because often they have robust management teams and they're executing across a number of different customer opportunities and contracts. But checking in with them and making sure that we are aware of where the market is moving and where the problems are continuing to go, so that we can ask them about, how are you thinking about these types of things? How are you thinking about these types of things? And push their thinking a little bit more. So I would say, really leaning in on the value that we have and the voice that we can be from someone who is within industry and operations can be really helpful, particularly to management teams who sometimes that's not their day-to-day.
All right, so this next question, I realize that you have a bias, right? But try to put yourself in the shoes of an entrepreneur for a moment, and you're contemplating taking money from a CVC. What are the things he or she should think about?
Yeah, I would be very intentional and focused about what and how you want any investor, but including a CVC, to add value, because then you can sort of, it goes both ways. Understanding the CVCs are looking at you, evaluating your product, and deciding if they want to put capital and back that company in, and if it makes sense. But thinking about doing that from the entrepreneur's perspective is just as important. Is this venture team going to deliver on its commitments? Are they going to add value? Are they going to provide the right advisory services that are going to help my company, go from 0 to 1? I think that that's extremely important, and looking at their track record of doing that is something I would strongly consider. It's a two-way street from a relationship building perspective, and that's, for entrepreneurs, I think that's extremely important and sometimes lost when people are looking to kind of, get what they need from a capital perspective so they can get moving to the next exciting things on their roadmap.
Yeah, talking to investors is actually not fun for entrepreneurs. That's spoiler alert. Okay, so let's actually come back to why I wanted to talk about this with this group, right? So there's not a lot of folks in the audience here who are in corporate venture per se, but I think it's very complementary to a lot of what folks out here are doing. So when you think about CVC complementing enterprises, other activities, can you talk a little bit about how it's supported the other innovation stuff that you do?
Yeah, sure. So one of the things that, I sort of like to think about is, enterprises calls itself within UPMC the innovation and commercialization arm, but there are countless innovation opportunities happening within, other parts of the organization and other parts of organizations outside of corporate venture. And so one of the things within our charge is to think through, are there innovative things internally that actually have commercial legs and commercial potential? They've proven value internally. Stakeholders love them and are using them every day. Understanding the problems that maybe some of our colleague health systems or health plans might be having, could they use something similar? And those are ways that actually I think that we can complement some of the other internal innovations that are happening within the system, is understanding, hey, this actually has legs and can be commercialized. And there's a couple of things in the enterprises portfolio and in the UPMC portfolio more broadly that have actually become sort of materialized through that path.
So your two area of focus are sort of women's health and then sort of more general here. how, I guess, how has the work that you've been doing around these interactions sort of made you more sensitive to just the issues there? And then what trends are you excited about in the spaces that you're investing in, starting companies and that kind of, those kind of activities today?
Yeah, I think I can speak to women's health, and I think that one's a pretty interesting one. It's getting more and more attention in the traditional venture world, but is still within healthcare investing. Digital health investing is still something like 5% of total dollars deployed are in women's health focused businesses. Folks like myself and folks internally within UPMC understand that women's health needs continue to be unmet. And I should pause and sort of say that when we're thinking about women's health, we're thinking about that as kind of being a quite broad term, including like trans and non-binary individuals, but folks who have concerns or health needs that might mimic some cisgender women as well. So. But it being a very open term and one that actually I don't think the industry has found sort of the right term to land there. But I should pause and sort of make sure that definition is more clear. But in thinking about how it's an opportunity that we've recognized that hasn't sort of gotten legs and starting to within the traditional VC world, and so we're thinking about what those problem sets and what the experiences look like for our patients and for our providers who are working in OB/GYN clinics, who are working in autoimmune clinics, and who are working in general practices supporting patients who are female, identify as female. And so some of the things I'm excited about there's a ton of innovation happening in the more reproductive health space, but also I'm really interested in kind of the autoimmune condition space. Those are diseases which disproportionately impact women of color, and very, very low investment dollars and extremely high unmet need. We're starting to see some entrepreneurs who are tackling that from a digital health perspective, and I think we'll see a lot more movement in that space. So something I'm personally like pretty excited about, and excited to see where the market goes on that one.
So it's okay if you can't, but can you give us a couple of specific enterprises projects, whether it's internal projects or investments you've made in the space that you're excited about against that trend?
Yeah, so we've just started to sort of look at that and form our strategic thesis about it. So I would say it's a new area for us. So we haven't yet invested, and we're still putting together a strategic thesis about it and trying to make sure we deeply understand the problems. So when we do start making those bets, that they're the right ones in a market that's emerging.
What does that look like at UPMC, right? Because I bet that's not that dissimilar from an internal innovation process. So when you're putting together these kind of, here's my thesis, here's how I'm going to go big in the space, here's the ecosystem, like what does that look like? What's the work product look like around that, the activities, that kind of thing?
Yeah, we follow a lot of traditional design processes, actually. So understanding the problem. We were talking about looking at the problem in the design thinking discussion a couple sessions ago. Looking at the problem, talking to stakeholders, talking to patients, to people who really understand and feel that on a day-to-day. Mapping workflow is a huge one that we have to think about because for anybody who might be thinking about starting a healthcare-focused business that sells into providers, workflow is highly optimized and sort of sacred. Interrupting that in a way that's not going to add a ton of additional value or efficiency is very, very difficult to do. And so we look at workflow, try to find what those inefficiencies are, and actually map that. From there, we think about the value chain. We think about the competitive landscape, and then we think about what would really move the needle in these spaces. And that's kind of the last piece of what we do. Solutioning is at the very end, following what we feel like is often a multi-month effort to really understand a problem and understand it deeply so that we can be intelligent and thoughtful when we're evaluating companies or when we're thinking about starting something.
All right, last question. So one of the things I think that's interesting about enterprises as well, from the little bits I know about it, is you have a lot of people who are either trained doctors or scientists or come from sort of biology broadly that then kind of work with you guys as a way to almost pivot their career. And I think it's kind of interesting more generally for people trying to do that. What have you kind of observed being around the team around this sort of career pivots that happen inside enterprises?
Yeah, as someone who came from a non-traditional background and has ended up, in a corporate venture capital role, I think there's a lot of things that, and you're right, a lot of my colleagues come from very unique and different backgrounds. It helps us, in my opinion, make better decisions because people are able to look at problems from a different perspective and bring their previous experience to bear on something which, at the end of the day, affects a physician, a doctor, or a larger system. And so I think in terms of, as people are thinking about kind of, or interested in this and honing those skills, I think curiosity is a huge one. Being able to kind of be optimistic, but at the same time, a pragmatist, thinking about the possibilities that a new technology or a new solution could enable, but at the same time understanding realistically what those hurdles are that you need to get there is another one. And being able to work through what are times deeply ambiguous situations where you would love to have more data, but you don't always have it. It are some of those skills that I think getting comfort with are really important.
Fantastic. Kathryn, I really appreciate you doing this. This is not easy to on a fly come up and do this. So thank you so much. This was awesome.
Yeah, sure. Thanks, everyone.